So, hey, this is Brad Hanewinkel with NextHome Simple Transitions. I thought I'd bring a lender on today, talk a little bit about credit scores and things we need to know when getting a loan. So Mike, tell us a little bit about yourself.
So my name is Michael Heath. I'm with Family Finance Mortgage. I've been in the lending business for about almost 6 years now.
You know, I received one interesting question, and I really wasn't sure how to respond. I had a client. Usually, I encourage clients to get pre-approved because you really can't submit an offer without a pre-approval letter in hand. And I had one client who was fearful of getting pre-approved because they thought it would ding their credit score, and if they weren't able to find a house within 3 months, would their credit score get dinged again, and would they be able to qualify for a loan?
So your credit, whenever we pull it, it's good for 120 days. So for example, this is a perfect example. I have a client right now that they went under contract. We pulled their credit back in February, and we had to re-pull because their credit's going to expire by the time we close. Well, one of the borrowers, his credit has dipped. Something went into collections, and now what they did qualify for, they no longer qualify for. So it's important to know where your credit's at. Just because you think it's good, oftentimes it's not, or it may be, but you really need to pay attention to it, and having the lender pull it within, like I said, it's good for 120 days. Just because I pull your credit one time within a month, if it does ding it, it's going to be a couple points. In the grand scheme of things, a couple points isn't going to make that big of a difference. Now, if you're in the 600s and you're sitting at a 638 and you're sitting at a 640 and I pull your credit, that could bring you down to a 638. So yes, that could be an issue. But again, you should be communicating with your lender, and you should know where you're at. And if the lender feels it's okay to pull it, then trust the lender. You should have a good relationship with your lender. You should trust them. They should be helping you make a decision. You don't trust that person that you're working with, then, again, your lender should be the person that you're looking to for financial advice for your mortgage, and they should be guiding you in that direction. Most of the time, lenders are, commission based, so they want the loan to close just as much as you do. So we're not out trying to give false information. And again, it depends on the person you're working with. But yeah, in the situation with the clients that we were talking about, we had to take that person off the loan because they weren't paying attention to their credit. And again, there's a lot of things that you can prevent just by communication with the lender. But as far as, go back to your question, I think I went off on a tangent, but
It's good.
To go back to your question, what I would say is that pulling it once a month or something like that, it's only going to ding in a couple points. It's not that big of a deal. What I would advise against is if a client is going to go shop, they're going to go shop interest rates, shop bankers. What I would not do is have multiple bankers pull your credit, because then, yes, it will take a hit. You're going to have multiple hard inquiries on your credit, and you're going to notice a drop in your credit score.
So I guess once again, if anybody has any questions, given your specific situation, if you wanted to ask either of us questions, don't hesitate to call or text or message us, and we'd be happy to help you guys further. So Mike, wanted to thank you very much for taking a few minutes to talk with us today about credit and about the loan process, and appreciate your time.
Yeah, not a problem. Thanks for having me.